This is the updated, well-structured text with all grammatical problems corrected. What I saw at the JGA factory amazed me beyond belief. There were no guys running around with machine guns and cowboy hats, though I have to admit that what I saw absolutely amazed me in terms of what a robot is capable of. I also think this specific robot is great since I like to see robots in dangerous circumstances. Combatants in the war face numerous such circumstances. I'm not sure whether you know this, but Leonardo da Vinci wanted to help people throughout the conflicts in Europe. His goal was to build an armored robot with a sensor in the back of its skull that would allow it to sense its environment. It has significantly superior vision and hearing than a human, and in combat situations where some humans freeze, it probably has the ability to think more quickly. This robot is not going to lose its dignity. The development of humanoid bots has increased rapidly, much like the popularity of electric vehicles. Even if Tesla is a huge success in the electric car industry, may a similar storyline occur in robotics. Some claim that Tesla's business model, which emphasizes affordability and technological supremacy, sets a difficult bar. Could Tesla's bots succeed in the same way that the Model Y's low-cost manufacturing strategy failed? Three groups of investors exist: traders who ride the hype wave, early adopters who profit from the excitement around the pre-IPO, and the rest of us who are left holding the bag. Is history about to repeat itself for us? Kindly hit the like and subscribe buttons so that we can answer your questions first. Welcome to Tesla Stock News, and let's get this video started. The hard reality is that, with the exception of Tesla, every EV startup has experienced enormous losses since their IPOs. This presents a dismal picture since loss is calculated by deducting index performance from performance from listing. This bubble is similar to the ones that came before it, as evidenced by the outrageously high valuation of young companies like Figure, which is presently valued at $2.6 billion. This bubble is being driven by Type 1 investors. Upon closer inspection, we discover something unsettling on the table. Unlike many other companies that are significantly losing money, Tesla has returned an incredible 13,743% since its first public offering. Making an investment in Tesla at the time of its IPO would have resulted in substantial profits. Everything is red, with the exception of Tesla, which has increased by 13,743% since its IPO. Tesla's stock has returned 13,364% when the performance of the S&P 500 is subtracted from the IPO. Therefore, if you had bought Tesla at the time of its original public offering, you wouldn't have needed a lot of money to make a significant return today. Think about Rivian, which has lost 88% of its value since its IPO, and Workhorse, which has lost 96% of its value. Even after accounting for the performance of the S&P 500, losses are even worse, with some companies seeing declines of more than 100%. Understanding the amount of money that early investors made is essential to placing Tesla's performance in perspective. The astute people who invested in Tesla at the outset witnessed a meteoric rise in capital, yielding gains that exceeded all projections. Thanks to its innovative technologies, inspiring leadership, and relentless pursuit of perfection, Tesla has made significant profits. However, the situation of other EV businesses paints a bleak picture of the challenges they face. Take Workhorse, which has plummeted a remarkable 96% since going public, or Rivian, which has plummeted 88%. These figures highlight the market's fierce competition, dynamism, and the inherent risks associated with investing in emerging sectors. Even after taking into consideration the success of the broader market as represented by the S&P 500, the losses that many electric car startups have incurred remain extremely evident. This serves as a sobering reminder of the volatility and unpredictability that are inherent in the world of investment. A 100% fall is experienced by certain companies. Beyond the data, these findings highlight significant questions regarding the feasibility of the EV market and the factors influencing its success or failure. What sets Tesla apart from its competitors? Is it only a matter of improved technology, motivating leadership, or strategic planning, or are there other, more important factors at play? An even more instructive comparison is offered by the early motor industry. Compared to the well-established participants in the EV area, the field of humanoid bots is still relatively young. Although the EV bubble serves as a helpful cautionary tale, it's crucial to comprehend the unique characteristics of the humanoid bot market. Now let's turn back and focus on the helpful table that was presented. It provides an incredibly clear image of the consequences of the EV bubble. Except for Tesla, every EV firm has experienced significant losses since going public. When losses are computed by subtracting listing performance from index performance, an unsettling trend appears. The staggering $2.6 billion that emerging companies like Figure 8 are currently fetching is proof certain that we are witnessing the birth of yet another bubble. This pattern is evocative of past bubbles, the majority of which were fueled by Type 1 investors. The information provided by the author about the various investor classifications is rather fascinating. The EV boom was driven by three investor groups. 1. Pre-IPO or early investors. These investors may have made a sizable profit if sufficient buzz was generated in the run-up to the IPO. Because of their early entry and lower entry valuation, they often generated attractive returns on their whole investment by selling down a modest piece of their total ownership at the IPO. 2. IPO traders, hedge funds, and similar entities. This group formulates a trading strategy without intending to hold for the long term while keeping an eye on the hype surrounding the upcoming listing. Prior to the IPO, they don't distribute equity. 3. IPO or post-IPO investors planning to hold. These investors, apart from Tesla, ended up being the ones with the most shares in all EV company listings. They joined at higher pricing, falling victim to the hype and setting themselves up for failure. Hedge funds and early investors have benefited from the hype that typically surrounds these kinds of circumstances, leaving retail investors to shoulder the brunt of losses. However, the source's categorization of investor types sheds light on the market dynamics at play during a bubble's early stages. Hedge funds and early investors that know how to ride the market's euphoria can turn a big profit. Retail investors suffer the most when the bubble finally busts because they are drawn in by the prospect of quick gains. Market bubbles have historically included speculative investing motivated by a combination of hype and greed. From the dot-com bubble of the late 1990s to the housing bubble of the mid-2000s, investors have succumbed to the allure of easy money on several occasions, only to suffer disastrous losses when reality set in. Now let's compare humanoid bot companies with electric vehicle startups. Even though it makes sense to compare them, it's critical to recognize their distinctions. Compared to the major players in the EV space, the humanoid bot market is relatively young and has no incumbents. A novel form of technology that has never been seen before is human-like robots. Robots that resemble humans compete in a different market than electric cars, which entered an already established one with many major players. They compete with human labor, not with other machines. It can be comparable to the way that cars supplanted horses, which were used for labor-intensive tasks until mechanization resulted in higher production. Now let's examine the viewpoints of Herbert A. and Sen Basher, who are co-founders of Human Bots, a company that is at the forefront of the integration of humanoid bots. They highlight a crucial contrast between EVs and bots: profit margins. Bots offer a different perspective, while EVs, even for Tesla, face narrow profit margins that necessitate significant capital expenditures for complex supply and production chains. The usage of current investments in battery technology and STK is expected to result in a reduction in the capital required for bot production. However, the development of humanoid robots presents a different picture. Because battery technology has evolved due to investments in electric autos and consumer goods, humanoid robots may leverage the current infrastructure. The capital required to build bots may be relatively lower because they can leverage the foundation established by the electric vehicle business. Additionally, the market for bots is immense and has a much bigger potential than that of autos. Since there isn't a bot market to compete with right now, there is a substantial probability of profit. Moreover, there is a compelling argument for the adoption of bots given their ability to work longer shifts, especially in industries where labor-intensive occupations are essential. In contrast to the established items that EVs had to contend with during their initial launch, humanoid bots are currently generating new opportunities and lucrative markets. If you're considering implementing humanoid bots in your operations, human bots can offer invaluable guidance that is tailored to your specific requirements. CRIN therefore provides a significant fresh viewpoint on the feasibility of humanoid robots. Unlike other well-established industries, humanoid bots' novelty initially permits premium pricing. Utilizing modern battery technology boosts profitability even further because these robots might be powered by the same batteries used in computers, electric vehicles, and mobile phones. This is in sharp contrast to the electric vehicle market, where profit margins are quite small because of well-established technology and intense rivalry. Electric cars have undoubtedly transformed the transportation sector, but their use is primarily restricted to fulfilling mobility needs. However, the development of humanoid robots gets over these limitations and has a lot of applications outside of transportation. One of the most remarkable things about humanoid bots is their inherent adaptability and plasticity. Humanoid robots can carry out a wide range of jobs, unlike electric vehicles, EVs, which are designed to transport people or items from one place to another. Humanoid robots have practically limitless applications, from performing physical labor in businesses to assisting with household duties. Herbert A's perspective highlights the myriad possibilities that humanoid robotics provide. Because of their sophisticated artificial intelligence capabilities and humanoid form, these bots may be tailored to meet a variety of requirements in a variety of industries. Consider a humanoid robot, for instance, that is capable of doing a wide range of intricate jobs with accuracy and efficiency. It would have advanced sensors and deft hands. Such a bot might bring unprecedented levels of comfort and productivity to sectors such as manufacturing, healthcare, and even entertainment, potentially entirely changing these industries. Furthermore, humanoid robotics are more useful than just being human-looking. Unlike traditional robots or vehicles, which are usually designed for certain tasks and cannot adapt to changing environments, humanoid bots possess the cognitive flexibility to do new tasks when required. This adaptability is a huge help in dynamic environments, where employment may evolve or change over time. Humanoid robots are easily able to assist with a variety of jobs, from household chores to complex medical operations. The futuristic picture painted by Herbert A. of a planet populated by numerous bot varieties emphasizes the groundbreaking potential of this technology. There are countless possibilities available, from jobs in specialized industries to providing domestic support. Please contact me if you have any questions or require any more tweaks.